Welcome back to Crypto Meets AI. Jerry here with an update for you. Do me a favor, friends. Smash that like button, hit subscribe, and comment down below. Now let's get into this. We're sitting at $2.49, trading with the range of 245 to 262. We're down about 4%. We're slowly grinding it back, but we can't seem to break that 265 range, 266. We'll keep an eye on it and see where we go from here. Once XRP becomes global liquidity, tier 1 asset, and an ESDR, its annual volatility should remain between 1 and 3%. Similar to gold or the pound sterling against the euro. In other words, the price will be high but very stable because it will no longer be driven by speculation. XRP is one of the strongest candidates to become the global liquidity bridge. That is, when someone exchanges local currency A to local currency B, the exchange will most likely go through XRP in the middle as a neutral vehicle. XRP is the vehicle of the new financial system. Hedera's Dr. Lehman Baird on recent developments within the DeRec Alliance, helping to recover Web3 wallet keys and more. This is very important. A lot of people won't even get into this space because if you lose those keys, that 24-word phrase you got, your crypto's locked in a vault and may be gone forever. Let's dive in and see what he has to say.
We right now have lots of fraud that goes on because someone steals those, but also people just losing things because they lost their key and they lost the 24 words that goes with their key. This is a real problem. You have people going to trash dumps looking for their hard drive that had the one and only copy of their key, all those sorts of things. It's just crazy. So what we need is a way to do recovery. There are really only two ways. Either you go find a custodian, you give it to them, and you trust them with everything you have, and you just hope that this centralized holding it is going to work okay. Yeah, it might. Or you go the decentralized route, and you give pieces of your secret to lots of people. And you can use Shamir secret sharing, which is math that ensures that one piece by itself tells them nothing. They have to collect half the pieces before they know your secret. So you give it to friends and family, or you give it to helper as a service. Maybe your helpers are just your friends, but maybe your helpers are your bank or your credit union or your lawyer or a company whose whole point is to be helper as a service. Or maybe this is what custodians evolve into. They do the custodian service, but they also do the helper service, which is like a custodian for a piece of a key instead of a custodian for the whole key. And then no one person can steal from you. No one bank or no one custodian could steal from you. So we created the DeRec Alliance. We have everybody on board. So Ripple is a member, and Cardano is a member, and Algorand is a member, and we have a lot of other members. If you go to DeRecAlliance.org, you can see all the members. We're growing rapidly. We have people writing code and contributing it. You talked about contributing code. That's also all open source, and we already have many different organizations contributing code to write libraries that are open source, whose purpose is to make it really easy to add DeRec. So whatever program you have, you wrote a wallet, you just want to add a few lines of code, and now suddenly you have the ability to share your secrets with friends and family or with helper services. Or if you're writing a game and you have in-game tokens, I love the idea of tokenizing assets inside a game. Well, what happens to the keys if the user loses their keys? You can set them up with DeRec so that they can recover. So this is the way to go.
Comment down below and you tell me, would this make you feel more comfortable with having crypto services or crypto wallets? Or would you rather do it the more traditional way and have a bank custody your crypto for you? That way you don't have to worry. Comment down below and let me know. Ripple is offering $200K to attack the XRPL lending protocol, teaming up with Immunify for a bug bounty attackathon to find and fix vulnerabilities. Forward thinking, forward progress. They're getting prepared for what might come. The IMF, the World Bank are currently holding meetings in Washington, D.C. with Christine Lagarde in attendance.
Good day to everybody. As you can tell, I'm here in Washington, and the IMF World Bank annual meeting are starting now. I just did a CNBC interview to set out the themes and the key points that I think we will be discussing in the coming days. But I'll be very proud to represent our European Central Bank and the policies that we have implemented and developed. I will be also very keen to talk to colleagues to make sure that cooperation prevails rather than antagonism.
When it seems like things may be moving slow, mass adoption and cryptocurrency ain't going to take off, believe me, they're meeting behind the scenes, behind closed doors, they're moving at accelerated speeds. Oh snap, Jim Cramer says he hopes money can be taken out of crypto and put into real economy stocks. Well, y'all know what's going to happen now. LFG, let's go to the moon. 50 years ago, London powered global finance. Today, Flare Network is building that role for the world's largest cryptocurrencies, starting with XRP. With data built into the network and a growing DeFi ecosystem, Flare Networks is the hub chain where assets like XRP, BTC, Doge, Litecoin, and XLM come to create value. Co-founder Hugo Filion shares how his vision is becoming reality.
Give me a Web 2 or normal world analogy for someone who has no idea about crypto, is trying to understand like what you guys do and why it's kind of important and changing the game.
A Web 2 analogy for Flare itself is that kind of gets to my bigger thesis of why we've built what is effectively a hub chain for XRP. So we've added XRP on Flare. At a later date, we will be adding Bitcoin, Litecoin, Dogecoin, possibly Stellar. We've built out a very strong DeFi ecosystem already, ready for these tokens. And I think there's value in all of these tokens, which hold very large amounts of value, to be able to come and be used in a single unified system. You know, a good analogy for that is something like London as a financial center, maybe 50 years ago, being a hub between Asia, Europe, and the US. If you think of each of those geographic locations as different tokens, XRP, Bitcoin, Dogecoin, London was a place where you came to do business between the world markets. Flare will be a place where people will come to do business, DeFi, between different token markets. And that's, I think, the best analogy I can come up with.
Interoperability is key here. I keep on saying it, multi-chain, multi-token system. I hope you guys are seeing what's unfolding right before our eyes because it's being laid out in front of us. It's right there. If you're noticing the theme here, everything is going to be interoperable. Everything about XRP was designed intentionally. Even Ripple's logo, it follows the golden ratio, a mathematical constant found in nature, art, and architecture, symbolizing perfect balance and scalability. Whatever comes next, XRP was engineered for it, my friends. And Justin, JPMorgan confirms they will allow clients to trade cryptocurrencies. Told you, they don't have a choice. These banks, these big institutions, they need to adopt the technology and jump on board, or they're going to get left behind.
And just in terms of another big topic that the banks are focused on, custody of crypto assets. I was speaking to Citi last week, suggesting they're going to launch their own crypto custody service. This is actually holding Bitcoin, Ethereum, and other tokens as well. When it comes to how you're approaching digital assets, how big a topic is custody right now? Is it something that you're looking to launch as well?
From a JPMorgan side, I don't think that's in the near-term horizon for us. I think Jamie was pretty clear at Investor Day that we're going to be involved in the trading of that, but custody isn't on the table at the moment. There's a lot of questions around our own risk appetite of how far we want to go down that path from trading and other sides of it, and then custody, I guess, would follow. But naturally, we need custodians, so we're exploring what the right custodians for us, for the business.
We've all seen the reports. They've given the green light for these big banks and these financial institutions to custody crypto, and that's exactly what they're going to do. Why? Because their customers and investors demand it. They either jump on board and adopt the technology, or they get left behind, like I've said many times before. Congratulations to SDF's President and Chief Growth Officer, Jose Fernandez de Ponte, on joining Santander's International Advisory Board. This appointment reflects the broader industry. The line between traditional finance and blockchains continues to diminish. Jose brings decades of payment experience and a deep understanding of how open networks can work alongside established financial institutions to deliver real-world impact at scale. And last up, money market funds. Trillions will be on the XRP ledger, sponsored by BlackRock and Franklin Templeton. Corporate bonds and government bonds are next. 300 trillion by 2030. XRPL on fire, my friends.
Product development. Let me ask you this, and you don't have to comment on the first part. And actually, I don't expect you to comment on the first part.
I probably won't then if you're prefacing it like that.
All right. So I have actually publicly predicted that BlackRock would file for a spot XRP ETF and a spot Solana ETF, which you have not yet done. And again, I'm not expecting you to comment on that at all. But what I will ask you is, how is BlackRock thinking about future product development around crypto-related ETFs? Because you have had these two massive success stories with IBIT and Ethos. So certainly that has to have your attention. But what about moving forward?
Yeah, well, there's a lot of factors that go into that decision-making process, obviously. But the biggest driver ultimately is our clients, right? What is the level of investor demand? What is the logic and investment thesis for investors and for our clients around these potential products. What problem are we solving for them? And so when we think about other potential opportunities in this space, obviously we're looking at things like market cap, liquidity, maturity, but also clarity of investment thesis and overall sort of product and portfolio considerations in terms of how clients long-term are going to be able to use products in this space, build the types of portfolio exposures holistically that they want. And so that's a constant evaluation process. It's not a fixed point in time thing, but ultimately that's the kind of process that we deploy.
It's basic, simple, supply and demand. What the customer wants, the customer gets. Well, that's what I have for you folks. Until next time, stay savvy, stay stacking, and I'll catch you in the next one. If you enjoyed this, smash that like button, hit subscribe, and comment down below. And if you want more crypto deep dives, check out our videos right here on Crypto Meets AI. Thank you for watching. Remember to always do your own research. This is not financial advice.